Hi there everyone and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so looking at the XJO today, we can see not much has really changed. Okay, so 75 remains that magnet for our market. We can't get much below it, we can't get much above it. We just keep getting drawn back to that level. Classic consolidation. Our market has been behaving this way for quite some time now. Okay, so as you look through this trend, you get a nice big movement off trend, sideways into trend, nice big movement up, then sideways, nice big movement up, and so on and so forth. That's our phase we're in right now. We just come out of a nice big strong month through August. We gave some of that back and now we're just stuck. We are close to trend, so this sideways movement probably won't last too much longer. Give it about a week or so, and I'd say we'll break one way or the other. More times than not, you break with the trend, so I'm still making that assumption that we will break higher. Now, fundamentally, there's nothing really on my radar right now in the short term to suggest that we're going to break lower. Okay, but let's see how the next few weeks go and what we hear coming out of the US. So let's just get across to the US. S&P 500, they were closed last night. They had a long weekend, so they haven't traded since Friday. We'll see how they reopen. At this stage, their futures are slightly lower. Nothing to be too afraid about, though. They have taken a pretty strong rise. Most of our indicators suggesting in the short term they are looking a little bit overbought. So basically, they're still on trend. You can see that trend is very much still in place through here. Okay, but we have gotten, they have gotten a bit off their trend at the moment, so they're probably due for, I guess, a little bit of a pullback here, or potentially a little bit more sideways. Okay, without a positive catalyst, I can't really envision them pushing up just yet. I kind of feel like they're coming into a bit of a breather or a bit of a pullback sort of situation this month. But let's see what happens when they reopen tonight. We'll get a bit more noise out of that. You see there's zero momentum for over a week there, and they're overdue for that type of movement. They've had a pretty strong push, and now without a pullback, it is going to be a grind sideways. So it's going to be, for me, I think it's going to be one or the other here. Either a bit of a pullback into the trend, or a bit of a pullback into that 44.75, or a bit of a sideways grind through this month until we hit trend again. One of those two things need to play out, I feel, because most of our technical indicators are looking a bit overdone in the short term here. So today we saw the RBA announce, basically they've just confirmed that they're going to continue to buy bonds at a rate of $4 billion a week through to February next year. So not much really changed. Okay, so we knew that they were going to decrease it down to $4 billion a week, which is only a very slight decrease to what they were doing. But what they have done is given the market some confidence that they're not going to taper any further until at least February. Okay, they're going to so the board will continue to review the pace at which they're going to taper, depending on how things go. Obviously, the Delta variant and what we're seeing with the shutdowns in Victoria and New South Wales at the moment is going to be slowing economic growth. Therefore, I think the board, I guess RBA, sending the right message at this stage that they're going to continue to review. The good thing here is there's absolutely no indication of increasing interest rates. Okay, so they're still targeting the 2024 bond rate down to 10 basis points, basically. So really, we're not expecting any increase in rates at this stage for quite a few years. All right, so things are looking pretty good from that prospect. Okay, and I think that's going to continue to support markets overall. It's all about vaccine targets now, really. Like, the daily cases are becoming less and less, I guess, you're not seeing them in the headlines as much, right? What we're starting to see more and more in the headlines is vaccine targets. And what are the economies going to do? What are the different states going to do when we hit vaccine targets? What's the rest of the world going to do when they hit vaccine targets? That's what's hitting the main headlines around COVID right now. So that's having a positive effect on the market. We're seeing, travel stocks increase and things like that. So there's light at the end of the tunnel, okay? I think we could see a little bit of volatility around this, though. Right now, things are looking pretty good, but I think there has to be a bit of a reality check here that really, for the economies to reopen properly and to having travel from state to state and all states reopening their borders, it's likely not to happen until next year. Okay, we might start seeing some states open, but to get all states to the 80% and get all states to agree to timelines, I think is going to be a lot longer than what people expect. So for me, I still would be a little bit cautious here, okay, around travel stocks and things like that. From a long-term perspective, I think travel stocks are a good buy and hold for the next 2 to 5 years. But if you're trading the short term, it is looking a little bit overheated and probably is due a small pullback. But yeah, so guys, look, from here on out, I think there's going to be a move away from people looking at the daily cases as much. Okay, obviously daily cases are still going to be important, but I think there's going to be a slow move away from that and onto these vaccination targets. Okay, and what that means is us coming out of the harsh lockdowns we're in at the moment and finding some form of new COVID normal. And I guess as a trader and investor, what we're looking for now is what's the next move on the stocks. Okay, what stocks do we want to be in for the next 2 to 3 years, given that we're coming out the other side of this COVID into a world of vaccines, vaccinated people being able to do things and the like. Okay, so that's the next move, guys. All right. Okay, so I just want to mention iron ore here. Iron ore's crashed back down quite significantly over the past 2 to 3 months. We're seeing the miners all come off on the back of that as well. Well, your big iron ore miners, your big three, BHP, Rio, Fortescue. So basically, iron ore's crashed off for a few reasons. One is obviously China has capped their steel production to bring their pollution levels down for the Olympics next year. Or the Commonwealth Games next year, or Winter Olympics. Anyway, in March, so at some point next year, I think they'll start bringing that back up again, okay? What we don't know is where will iron ore bottom out, and that's what we're looking for now from a technical standpoint. We have not found that bottom yet, but when we do, I think there's an opportunity here in the miners to pick up these miners cheaply. So keep an eye on this space. I think that's a great trading and investing opportunity coming, given the big falls we're seeing, but we haven't found the bottom yet. Don't try and catch that falling knife, guys. Just be patient. Watch that iron ore chart. In particular, we like Rio and BHP. BHP's got more of the green energy assets. Okay, copper's holding up really well, and they've also got the nickel assets and potash and things like that. They're moving away from the oil. So from a long-term perspective, we really like BHP, but we're not prepared to go out and buy just yet. We are just waiting for that bottom of the iron ore price. The Fed's next big thing, guys. Okay, so switching over to the US, the first half of September we're expecting to be fairly quiet, but the second half of September I think we're going to see is going to be quite eventful. Okay, they're coming into the end of financial year for the US. They're also 21st, 22nd of September we'll have the Fed meeting. In that Fed meeting, we're expecting them to announce when they're going to start tapering bonds. What we don't know is how much, at what pace, and how quickly they're going to come out the other side. So the messaging here has to be pretty precise from the Fed, or else the market might get a little bit spooked. So I'll be clear, we are expecting a tapering announcement. How detailed they are will depend on how the market will react. Okay, we want to see what that message looks like. We want to see whether the market gets spooked. If the market does get spooked, I believe it will only be temporary, because Jay Powell is very, very clear. When they stop tapering bonds and they're not buying bonds anymore, it does not mean interest rates are going up. Right? He was very clear on that fact. What we need to watch out for, once again, is we have a inflation reading early next week. All right, so that's going to set us up for how the market may react to the Fed as well. So they're the few things that I'm looking at the moment for the US, okay, from a monetary policy point of view. The next thing is obviously Biden. He's got a few things coming up. One is his $3.5 trillion budget that he's trying to pass, but also they're going to hit a debt ceiling by the end of this month as well. So he's got a few things that he needs to do this month that's going to be critical to the mood of the market. We want to see this infrastructure bill. We want to see the $3.5 billion trillion in spending. That's all physical stimulus that's going to help their markets, going to help push them higher, and it's going to help world markets follow. Okay. Also, we don't want to see too many problems around the debt ceiling. We can sometimes get a little bit of volatility around that. So let's see how those negotiations go. But I expect all that to happen in the second half of this month. So I still think 1 week of sideways whippiness, and then we could start getting some volatility or some momentum back into this market through the second half of September. But for now, look, things are all quiet. We'll see how the US trades after a long weekend tonight. At this point of time, the futures are just slightly lower for the US, so nothing to really guide us at this point. I don't believe we're going to see much volatility tonight, one way or the other. I think it'll be fairly sideways. All right, so thanks for listening in this week. You'll take care, and bye for now.